1. The Greenland relief rally hits a wall. After a week of geopolitical whiplash, markets initially cheered President Trump's decision to walk back tariff threats against NATO allies. However, the optimism was short-lived. By Friday's close, the TACO acronym, Trump always chickens out, was the talk of the floor, as investors realized the underlying tensions regarding Arctic sovereignty aren't going anywhere. 2. Intel's double-edged earnings. Intel performed a classic beat and bleed. The chipmaker nearly doubled profit projections, but the stock plummeted 13% after management warned of severe supply constraints. It seems the market is no longer satisfied with what you did yesterday. It only cares about what you can build tomorrow. 3. Gold chases the $5,000 milestone. Safe haven demand sent gold futures soaring to yet another all-time high, touching $4,945 an ounce. With the US-EU relationship on shaky ground and record deficits looming, investors are flocking to the yellow metal as the ultimate insurance policy. 4. Buffett's rare misjudgment with Kraft Heinz. The Oracle of Omaha is making a move. Regulatory filings revealed that Berkshire Hathaway is preparing to dump its 27.5% stake in Kraft Heinz. The news sent the Ketchup King's stock to a 52-week low, signaling the end of an era for one of Buffett's more taxing investments. 5. Netflix and the Discovery dilemma. Despite topping subscriber forecasts, Netflix shares dipped 2%. The culprit? A cautious outlook and a pause in share buybacks as the streaming giant prepares its war chest for a massive proposed acquisition of Warner Bros. Discovery. 6. Moderna pulls back on US trials. In a move that sent ripples through the biotech sector, Moderna announced it is scaling back new late-stage vaccine trials in the US. CEO Stéphane Bancel cited growing resistance from US officials, stating bluntly that if you can't access the US market, you can't make a return on investment. 7. The PCE, wait and see. Inflation data, PCE, came in exactly as expected, 2.8% year-over-year. While this would normally be the headline, it was overshadowed by the looming Federal Reserve meeting on January 27-28. The market is currently betting on the Fed holding steady, despite political pressure for a cut. 8. TikTok's final safe harbor. After years of legal battles and will they won't they headlines, TikTok officially completed a deal to continue operating in the US. The news provided a relief bounce for social media proxies, though the cost of the deal in terms of data oversight remains a closely guarded secret. 9. Amazon braces for the January chop. Reports surfaced that Amazon is planning another significant round of layoffs, potentially starting as early as next week. Following the 14,000 cuts in October, this suggests the tech giant is still aggressively trimming the pandemic-era bloat to protect its margins. 10. Capital One goes big on fintech. In the day's biggest M&A news, Capital One announced it is acquiring the fintech startup Brex for $5.1 billion. The move signals a major play for the small business and startup credit market, as traditional banks look to swallow up their more agile digital competitors. Market snapshot. S&P 500 to 6,913.35, down approximately 0.1%. Nasdaq, 23,436.02, down approximately 0.1%. Gold, 4,945. OZ, record high. Bitcoin, 89,500.